Hi, I'm Jason Sullivan of Rathbone Group, and this is on subrogation. In this video, we're going to discuss pursuit of a subrogation claim against a commercial carrier and possible satisfaction of a judgment through an MCS-90 endorsement. Under the 1980 Federal Motor Carrier Act, all commercial carriers engaged in interstate commerce have to show proof of financial responsibility. They can do this three ways. One, through self-insurance, a certification that they can pay the damages. Two, through the purchase of a surety bond. And three, they can purchase traditional insurance coverage. The third one is what we're going to focus on today, and specifically insurance policies that then have an MCS-90 rider. The MCS-90 rider is not insurance coverage. Rather, it's a rider to a policy that states no matter whether or not there's an exclusion under the policy, the insurance carrier is going to pay for the damages caused by that motor carrier. If you want to look at it this way, it's just a certification that if there's a judgment against that motor carrier, it's going to get paid, no matter what exclusions or policy denials may possibly exist. The level of coverage depends on what the motor carrier is transporting. If it's non-hazardous goods and material, the minimum coverage is $750,000. Through certain classes of hazardous material, that coverage has to bump up to $1 million. And if it's a portable container or bin with hazardous material over 3,500 gallons, then that coverage has to jump up to $5 million, making sure that the public is protected from any accidents or catastrophes that may happen due to that motor carrier's actions. When you are pursuing a claim, even if you don't know whether or not there's insurance coverage and MCS-90 rider attached, you always want to investigate and try and get that information from the carrier. If for some reason that carrier refuses to turn it over to their insurance carrier, you can still pursue the claim, you can obtain a judgment, and once that judgment's obtained, the MCS-90 rider is going to kick in and that other insurance carrier is going to have to pay. It does not matter that there might be an exclusion. And the types of exclusions we're talking about are an unlisted vehicle, an unlisted tractor, or an unlisted trailer. If for some reason that commercial carrier has failed to add that tractor or trailer to the policy, normally the insurance carrier could deny and just not pay anything. However, the MCS-90 rider prevents that from happening. If you are a carrier that does issue commercial policies, you may find yourself on the other side of this. You may find that you have an insured who has caused an accident, and normally there wouldn't be coverage for that unlisted vehicle reason, or potentially road rage, frequently accepted and not paid for under insurance policies, but your company would be obligated to pay for that under the MCS-90 rider. In that case, frequently you can go back to your insured and seek reimbursement of everything that was paid due to that MCS-90 endorsement, even though it wouldn't have been covered under that policy normally. That prevents an avenue for recovery. So there are two ways to look at this. One, if you've been an injured person due to a commercial truck engaged in interstate commerce, or if you're an insurance company that's been obligated to pay under the MCS-90 endorsement, but you really shouldn't have had to pay because of some issue with the policy, then you can go back to that at-fault motor carrier and get them to pay you the damages back. So there are really two sources of subrogation or recovery for insurance companies that come out of the MCS-90. So anytime that there is a collision with a commercial carrier and you're the party seeking damages, you always want to look for that MCS-90 coverage and try and find out whether or not they purchased regular insurance, in which case they should have an MCS-90 endorsement. If you're a carrier that issues commercial policies and pay out on MCS-90s, you always want to look to see if there's an exclusion that exists under the policy. It's not going to prevent you from having to pay a judgment, but it may give you a cause of action to try and recover that money back that you wouldn't have ordinarily had to pay. If you have any ideas for a topic or video you'd like to see us suggest, please email us at video@rathbonegroup.com. I'm Jason Sullivan for Rathbone Group, and that's the long and short of it.